According to CarGurus, new auto inventory rose for the first time this year in October, but prices also climbed higher thanks to inflation. New car prices were up 24% year over year last month, while used cars were up more than 30% from last year's levels. That's giving CarGurus a big boost. The online marketplace saw sales surge 51% last quarter, while shares are on pace for their best year ever, up 24%. For more, let's welcome the CEO of CarGurus, Jason Trevisan. Jason, so new vehicle inventory increasing a bit, but is that in part because people figure I can't find a car anyway, so they're not actively shopping? What's going on here?
No, thank you very much for having me on, John. So new car inventory is still down quite a bit. It is up over the last 30 days, but it is still down about 70% from last year. Used car inventory is also down about 10%, so not as bad, but inventory is down across the board. You see a lot of dealers' lots that are less full than they normally are. And as a result, especially with high consumer demand, prices are up quite a bit, which you cited.
So when does this turn around, do you think?
That's a good question. And the industry has forecasted that it could be as early next year, but I think increasingly the estimates are pushing into later next year.
Why is that?
It's born out of the chip shortage among the OEMs, the new car manufacturers. They canceled a lot of their orders, understandably, at the start of COVID, and then had to get back in line for the chips. And as a result, it's working its way through the system, and new cars are hard to get. So if you were to try and buy one now, you likely wouldn't get it for several months.
But I wonder, too, from all I hear about the foundry prices rising for chips, particularly the type that are going into the auto industry, which aren't the latest process technology. If those prices are going up, it seems like the car prices are probably going to remain high, which makes me think that maybe this inflation isn't transitory. I don't know. How much should we read into that?
So I think it's a great question. I think what's a bigger driver of car prices right now is that imbalance of high demand with low inventory. And so what you're seeing is that new car prices and used car prices are both up. People are paying for speed, so they'll pay oftentimes more for a used car they can get today than the same car that they would get new, but not for 6 months. And cars are sitting on lots much less time. I mean, the days on market for a new car is down to about 2/3 of what it was a year ago. I think that the increase in chip prices may cause a slight increase in new cars in the future when inventory is normalized. But I think the bigger issue now is the inventory constraint.
What is going to determine what the car market looks like when we come out of this supply-constrained situation? If demand remains high and the economy in general is strong, then I imagine it might be a softer landing. But there are scenarios, aren't there, where this goes pretty badly. If the economy weakens and then the supply shows up in the second half of last year, I mean, prices we could be in for quite a ride.
It could be. I think what we're starting to see now is, as we do a lot of consumer research, given the size of our consumer audience, is that consumers are realizing and reacting to the high prices because of the demand imbalance right now. And so in a recent poll that we did, we found that 56% of consumers are aware of much higher prices. And as a result, almost 1/3 of consumers are delaying their purchase. So I think, like in a lot of us learned in economics classes, the supply and demand do tend to balance out over time. I think the other big shift is that a lot of consumer behavior is moving online, which is where we're focused on our platform. And that allows consumers to do more of the purchase online, spend less time in the dealership. And that's allowing dealerships to have some pretty profitable quarters here because they don't have the size of the sales force they used to have.
Yeah, software, once again, helping to drive efficiency. Jason Trevisan, thank you from CarGurus.
Thank you very much.